My name's Nick Davis. I'm going to just kind of go over more or less our unsecured business lines of credit product. It's a great product for startup capital for businesses, as well as just working capital for businesses that are currently in business making a profit. What sets this product apart from most other lending vehicles is that this product is specific to your credit profile. Most unsecured business lines of credit that you're going to find at your local bank, as well as an SBA loan or any other type of business funding product, merchant cash advances, etc., are going to require hefty requirements from the lender, such as tax returns, last 2 to 6 months, and bank statements. It's going to require everything from profit and loss statements. How do you advertise? Do you have a brick and mortar location, etc.? This particular product is fantastic because, again, all we're looking at is your specific credit profile. Basically, in a credit profile, we're looking for someone that has north of 700 credit score, as well as we're looking for some indicating factors on that profile in terms of the depth of the credit, meaning what's their largest available revolving credit line, and we're also looking at how long have they had established credit. If the criteria meets what we're looking for initially, then we go straight from an application to our underwriting. If the credit profile does not meet these requirements, we do have steps that we can take in order to facilitate getting the client credit profile up to par, basically to move forward with this specific product. The product itself, it can fund in as fast as 10 to 14 business days. Again, we don't require any kind of income documentation. These are multiple credit lines. They come in the form of both business and personal credit lines, and they're typically anywhere from 6 to 24 months interest-free, but our average credit line is going to be at 12 months at a 0% introductory term. After that introductory term of 1 year, it's going to be into a blended rate based on what the multiple lines adjust to after that introductory term. Typical lines are going to be about 9.99%. It can go higher. It can be as high as 12.99%. So you may have a 4.99 line with a 6.99 line with a 12.99, going up from there as high as 14.9. But when you blend it, it shouldn't exceed around 12.99%. But again, every client's credit profile is different, so these are what the typical rates end up being after that introductory term. But once we actually get these lines, we know exactly what that will be after the introductory term. One borrower that's at the great credit profile, basically high credit scores in the mid sevens, good depth in their credit, good revolving lines, we can fund as high as $180,000. On our average client, that's a regular credit profile around the 720 range, more or less. We're looking at somewhere around the 100 to 150, and we don't require any operator experience. And this is a 100% signature-based, uncollateralized money. So again, we don't need to see any business financials in order to facilitate this, other than just looking at a credit profile and that the customer or client is a business owner and has an EIN number to attach to their business profile, and that they're utilizing this money for their business. And that's pretty much the requirements for this product. Now, how we work is we will discuss with the clients their needs, and we like to hear clients that are leveraging their money, going to be using this money to obviously make some more money for their business. And pretty much we start off on an application phase, which we will explain the product in detail. We'll send out an application to our clients, and with that application, we're going to request some personal information, as well as having them sign up for creditchecktotal.com, which is Experience credit monitoring website. Once the client has signed up for creditchecktotal.com and provided us with their application, then we're going to, within 24 to 48 hours, have our underwriter review that credit profile, and we will issue out an approval letter based on what that person can achieve based on their credit profile. Now, if we have specific conditions in terms of we may be looking at specific lines of revolving credit. If they have a credit card, we're going to require that to be at a 45% debt-to-income ratio. So if you have a $10,000 credit card, we're looking for that line to be at least paid down to $4,500, and that ratio goes across the board for any revolving credit cards. Once that has been achieved, so on our initial approval, we may say in order to facilitate you getting $100,000 to $125,000, we're going to require you to pay down X bank card or X revolving line to that 45% ratio. And once that's achieved, we may be able to go forward, or we may have other ways that we may need to revisit as far as credit repair. If there's a 30, 60, 90 days late on the credit profile, if we have collections or foreclosures or anything of that nature, then we have a credit repair affiliate that we work with, and we have a very good agreement with them. It is a third party, and basically what we do is we transfer our client to that person, and they're able to facilitate, typically on a normal, easy profile with just a few things that are derogatory on a credit profile that need to be removed. We're normally seeing anywhere from a 30 to 45 day turnaround for those things to be removed to move forward with the process. So again, we're looking for removing all derogatory reporting items on a credit profile. We're looking at getting revolving lines of that are currently on your credit profile down to a 45% debt ratio to what the line available is. And furthermore, if we have someone who has a very good credit score, but they don't have deep credit, we may have alternate ways, such as authorized user, which is another third party, which basically is adding a line to your credit reporting to give you more depth and also add a longer time frame of having established credit. So those are pretty much the three conditions to our approvals, and it all depends on what that person's credit profile looks like. Now, let's get a scenario. Let's just say this, our client has a credit profile that meets all these things right out the gate. So what we would do is give you an approval. It's going to have an amount of the funding you're going to be able to receive, and at that point, we were going to give you that approval with that amount, and we're going to go ahead and provide you with our contract for services. Contract for services is basically a contract that you're allowing us to obtain lines of credit on your behalf. All right, and once we start that process, we begin the underwriting process, and that typically takes about anywhere from 10 to 14 business days till we complete our process in full. Once we have completed our process and obtained the lines of credit, we walk our clients through a liquidation phase and show them how to turn these lines of credit into cash in your business account and keep that same 0% introductory term that these lines of credit come with. Now, the lines of credit do come in the form of both convenience checks and credit cards. So they're basically large lines on a revolving credit card. And again, we can show you how to liquidate these, and it's going to be cash in your account at a 0%. And once we've completed that process, we go ahead and move forward with our billing, which we complete at the end phase of our product. So there are no upfront fees. Once we've actually completed our product in full, liquidated the funds to a business bank account, then we move forward with our performance guarantee fee. And that's pretty much how the process works in a nutshell. Do you have any questions?
Is there a personal guarantee involved, Nick?
It's a personal guarantee in terms of you're signing on the dotted line just your name as a personal guarantee for the credit line. So when you say personal guarantee, there's different types of personal guarantees. There's personal guarantees where it says, you're signing a personal guarantee for all assets that you own. This is basically just like a credit card. So think of your $5,000 credit card you may have on your wallet. If you default on that credit card, then typically if it's an obvious default, then a bank may take it to a scenario where they may want to send you some letters or actually take it further than a normal collection. But that typically does not happen with credit cards. Again, when it comes to personal guarantee, that's something that we normally would refer someone if they want to get very specifics on what that entails to their attorney. But it basically is more or less like how a credit card works. You're looking at basically getting your credit profile jeopardized but it does not. It's uncollateralized, a personal guarantee. So no one's going to be able to go after your home, your car. You're not putting up any collateral with that personal guarantee. You're basically guaranteeing based on your credit profile that you are agreeing to these terms. So, and again, these are terms with the specific lenders that we get the lines of credit from.
Okay. And the way that it reports on my personal credit report, is it just like I'd have any other credit card, how that would show on my credit report?
Exactly. It's going to show us exactly just as a regular revolving line of credit, which is basically what a credit card is. If you Google what is a credit card or what is a line of credit, you'll actually see it. It'll come up right away, and it's going to say that a credit card is just another form of a line of credit. It's just that we're able to maximize the approvals and the amounts. Basically, we know the lenders based on our customers' demographic location that are lending, and we have a specific way facilitating the process in order to maximize the approvals, in order to get as high as $150,000 in lines of credit. But yeah, it's basically going to show as a credit card. If you're late one month, it's going to be you're going to get a 30-day late on your credit, and you also more than likely that credit line, depending on the type of credit line it is. If you default, then you may automatically jeopardize yourself to go into double-digit interest if you do any late payments within any time frame within having that credit card. And each line will have its own terms, but they're going to be very similar. And we always will go for a 0% introductory line, with the exception of maybe one or two lines, which may be a very, very low interest rate for the life of the line of credit. And that's one that can be as low as 4.99 for the entire life of the line of credit. So.
Okay. And how will this affect my debt-to-income ratio if I choose to buy a house in the next couple of years?
Right. Well, your debt-to-income ratio is going to be based on what you're paying on a monthly basis. So, when it comes to a line of credit, it's whatever your minimum payment is what's going to show on your monthly debt ratio. So these lines typically are going to be about 1.5%. So if you got $100,000, your minimum payment is going to be more or less $1,500. So that's going to be on a monthly basis. So that would be more or less looked on by a mortgage lender in terms of what's the monthly requirement to pay, which would come into play with your debt-to-income ratio. So it all depends on how much money you've actually utilized and paid back, what your minimum monthly fee is, and that would be determined when a mortgage lender would do your debt-to-income ratio.
Okay, gotcha. Is there anything else that I need to know about the program that we haven't discussed so far?
I think I pretty much covered it in a nutshell. One thing that I would like to be very specific on is that it's both business and personal lines of credit. The business lines of credit, what's great about those lines is that those will start reporting to Dun & Bradstreet, giving your business a PAYDEX score. So, anywhere between 9 to 12 months, you should have, it's going to assist you in establishing business credit, and it will report, again, establishing that business credit for your business. And the personal lines are going to affect your personal credit profile. And when you have large lines of credit and you continue to pay them down and money becomes available to you again and you have massive amounts of available credit, these are the credit profiles that get into the 800 credit range. These are the people that are able to get that high in terms of types of credit scores once you start to pay down these lines. So yeah, that's pretty much the product in a nutshell. And if you have more questions, go ahead and shoot.
Is there any way to show that my business is paying the line as opposed to me, so it offsets my income in any way?
Well, first off, the funds that are paid to our company is going to be from your business, because we only bill a business bank account, so that can be a business expense. Obviously, all the business lines are going to be in the business name as well as the individual's name, so that's going to be a direct payment of the business. Now, when it comes to personal credit cards and things of that nature, if you're using that as a business expense and you're paying it with your business account, then you should be able to retain your receipts as long as you can show that it's something that was applied towards your business. But these are personal lines. We're probably looking at maybe about 65% in personal lines, about 35% in business lines. That's our typical client, because most of our clients come to us either at a startup phase in their business, and they don't really have an established business credit profile. So on the business side of things, the lenders are looking at their personal credit score in order to determine what type of business credit they want to give this person. So, there's only so far we could take a business credit with someone that doesn't have any established business credit based off of, like I said, they're looking at a personal credit profile to establish the risk on lending on the business side of things. But once you've established business credit, or if we get a client that has established business credit, then that 35% could easily be a 50% ratio or more, depending on how established their business credit is. We could maybe go for more business lines and get bigger approvals on those business lines because they have established credit. Typical client is going to be at a 35% in business lines of credit, 65% in personal lines.
Okay. Well, Nick, I certainly appreciate your time, and very much were helpful in explaining the program and helpful with the questions. So thank you very much.
Not a problem. Appreciate it. You guys have a good one, and I'll talk to you soon.
Okay. Take care.